Okay, so today I want to go over a couple of important updates on electric vehicle credits. So if you remember from prior updates, you can claim a $7,500 credit for a purchase of a new EV. And the IRS has just released guidance that kind of changes the administration of this tax credit to be more in line with what they actually intended when they drafted the bill. So the way it's going to work now is rather than having to claim the $7,500 on your actual tax return, so you'd purchase the vehicle at some point in 2023, and then when you file in 2024, you claim the credit and basically add that to your refund is kind of the idea behind it. Now, instead, you can actually claim it at the dealership and agree to transfer the credit to the dealership, and they'll reduce the purchase price by that amount. So essentially what that means is, number one, you get some money in your pocket a lot faster. And then number two, the other big change that kind of comes along with this is that you're no longer limited by your tax liability. So before this, if you're going to claim it on your tax return, that means you have to have $7,500 of tax liability to claim the credit. That means that if I'm a single person, I've got to have like $69,000, $70,000 in ordinary income to generate $7,500 in tax liability. If I'm married, it's like $93,000, $94,000 in ordinary income. So what that means is that, it kind of put a income floor saying, it's really you only get the full benefit of the credit if you have at least this much in income. So this kind of removes that. It says, the guidance says that they're not going to recapture these tax credits. In other words, if you don't have $7,500 in tax liability, they're not going to come after you for the whatever the delta is between those two. You just get to claim it and you're good. So two kind of drawbacks that I see going wrong with this is that, number one, lots of people don't know what their income is. So income in your eyes is like my salary, but sometimes you have investment income, you have rental property income, something that you maybe don't factor in mentally. And so when you go to the dealership, the way that this is going to work is you just basically check a box saying that you certify that you qualify for the credit. And if you remember, there's income limitations to this credit. So like if you're a single person, you've got to make $150,000 or less. If you're married, it's $300,000 or less. And so you might certify at the dealership that, yeah, I qualify, but then things change throughout the year. You get a big bonus that you didn't expect, or, big stock gains or something like that. And all of a sudden you're over that threshold and you don't qualify. Well, the dealership already sent that information, the VIN number of the vehicle and your social security number, to the IRS. So they have that information. So then when you file your tax return for 23 or for 24 is when you're going to be claiming this. All this is effective January 1st of 24. I don't remember if I said that, but basically what happens is the IRS is going to get notified. You're going to file your tax return. They're going to say, hey, you're over that threshold. You actually didn't qualify for this credit. And they're going to send you a bill saying, give us $7,500. So that could be a pretty significant drawback to the way that this is being administered. It's generally a good thing, but I could see some potential issues with that, just people not being aware of what their actual taxable income is going to be. And then the other potential drawback I see is like just pushy sales tactics, of hey, all you got to do is certify here and you can get an extra $7,500 in tax credits. And so I could see some kind of pushy sales techniques just to get people to purchase cars and get the $7,500. And then maybe people will be misled and not really understand what they're certifying to and realizing that they maybe don't qualify. So those are the couple of drawbacks, but overall, this is a good thing. It gets people the money faster. It'll encourage more people to purchase EVs, especially lower income people who may not have benefited from the entirety of the credit. So overall, a pretty good thing, but a pretty significant update.